The New Zealand dollar fell sharply during trading early yesterday morning. The New Zealand dollar fell over a cent against the US dollar, with no apparent trigger causing the decline. We suspect that the decline was triggered by perhaps a large market participant repositioning themselves as a result of the Japanese earthquake. The New Zealand dollar has been under pressure against the US dollar since the earthquake in Japan. Many are speculating that Japanese investors will bring money back into Japan to help the cost of cleanup. Meanwhile, in other news, consumer confidence in New Zealand plunged in Q1. The survey was taken in the first 2 weeks of March, which was immediately following the Christchurch earthquake. As a result, it's not too surprising that consumer confidence was negatively affected. We also saw petrol prices increase quite strongly over Q1, which was likely to also be weighing on consumer sentiment. The Reserve Bank, when it cut the OCR by 50 basis points, did note that the large move was in anticipation of a large decline in consumer confidence. As a result, we expect that lower interest rates will provide some support to households, and we expect confidence to recover later this year. The Minister of Finance was out yesterday commenting on the government's finances as a result of Christchurch's 2 earthquakes. The combined cost of the earthquake, above and beyond other insurance, is likely to cost the government around $10 billion. This is going to increase the cash deficit that the government is facing and, as a result, increase borrowing. However, S&P analysts were also out commenting that the New Zealand government has some room to absorb lower revenues as a result of the earthquake. Indeed, they noted that New Zealand's debt is actually relatively low compared to some of its other AA+ rated peers. This does suggest that the New Zealand government is not going to be adversely affected by an increase in debt as a result of the earthquake, and we expect that New Zealand's credit rating will remain intact. Economic data out last night showed that the US recovery is continuing to gain momentum. In particular, FedEx reported solid volumes over the last few months. In addition, industrial production data for the US was also quite upbeat. This is supportive of Ben Bernanke's comments that the recovery appears to be gaining firmer footing. Meanwhile, in Japan, fears are growing for the economic outlook. The yen has surged to post-World War II highs against the US dollar, and this is prompting concerns for exporters in Japan, which are already struggling with power outages as well as disruptions to the supply chain. Japan is the world's 3rd largest economy and New Zealand's 4th most important trading partner. There are concerns that lower growth in Japan may have some knock-on effects to other global trading partners, in particular given Japan's importance in industrial production, particularly for high-end electronic manufacturers.